Has the IRS sent you a bill, but you haven't even filed your tax return? I'm Michael Redden, and I'm a tax attorney here in the Twin Cities in Minneapolis, and I help taxpayers with IRS debt and with debt with their state taxing authorities. Now, there's a common misconception out there that the IRS or your state Department of Revenue, they can't assess a tax, they can't come tell you owe money if you haven't even filed a tax return. I mean, how do they know what you owe? How do they know what you made if you didn't come forward and tell them and give them a return? Well, believe it or not, every time someone files a 1099 or your W-2 or anything like that, they have to send a copy to the IRS and often to your state taxing authorities. And if your state taxing authority and the IRS think, hey, we've got enough information on file that we can probably do the return for them, they're going to do it for you. And here's the bad part about this, right? They know how much you made, so they know how much they can tax you, but they don't know what your deductions are. So they're going to come together and put together what's called a substitute for return. And we commonly call that an SFR. That's basically where the IRS gets together and says, I know how much you made, so I can assess tax here. That means they're not going to give you your deductions for your mortgage interest. They're not going to give you deductions for your student loans. They're not going to deduct any of those business expenses, nothing. They're just going to put it together and say, we know this is what you made. Based on what you made, this is what you should have paid. It's up to you to prove deductions, right? Well, you didn't file a return, so you didn't prove them, so we're not going to give them to you. And typically when that SFR is filed, that tax debt's going to be much larger than it normally would be. And they'll do it at the state level too. In Minnesota, it's called a commissioner filed return, where the Commissioner Department of Revenue files. And at this point, that's when all that collection action begins, right? You get those nasty letters in the mail. They may lead up to a lien against your property. They may even come and levy your wages and do things like that, right? Well, there is kind of an upside to it, right? The IRS has 10 years to collect debt, and they'll start that clock from the time they file that SFR. So, there is an end in sight, even if you don't settle with them. But it's usually better if you settle with them. You can have all different kinds of options. Maybe you go and file that return because you believe you owe less and get them to reconsider. Maybe you don't want to do that. Maybe you find out you owe more than what the IRS thought and you'd rather use their numbers. But the point is, if you have that SFR and you filed the rest of those returns back for the last 6 years and you start making current payments, you'll be compliant. And then you'll be able to sit down and talk to them about settling up your tax debt, whether it's through a payment plan, maybe you're going to offer them less money for an offer in compromise. Maybe it's not even the correct tax debt and you want to go try to get them to reopen and take a look at it. It's not all the time can you do that, but sometimes you can. But the point is that once these clocks and these things start and things move into motion, you probably should start doing something to take care of this before it gets out of control, because now that they've assessed the tax, they're going to come collect the tax, and they're very aggressive about it. If you'd like to talk to me about your tax situation, or if you know someone else who has a tax issue, go to taxhelpmeeting.com. That's taxhelpmeeting.com and set up an appointment with me today.